Hey guys, welcome to my update for this week of September 16, which is set to be fireworks. We have a lot going on, including this Token 2049 crypto convention in Singapore, which often has sell the news events. Let's see if that happens again or not. It happens to coincide with the rate cuts, and that's going to be causing a lot of uncertainty in the market. So this will be very interesting. We've also got Trump launching his new World Liberty financial crypto exchange, and he's going to be announcing the details of it later today. So far, the only thing we know is it's some kind of a platform, has DeFi, and his sons will be running it. This should be very, very interesting, and this could potentially inject a lot of hype into the markets for crypto. We have a huge week of economic data, especially the rate cuts and the FOMC press conference. Honestly, I am not planning to trade this whole week because odds are against you. There's always crazy volatility during times like this when the markets are very emotional. The probabilities of whether it's going to be a zero point 0.5 or a 0.25 rate cut is a coin toss and has been fluctuating a lot in the last few weeks. All right, let's move on to some macro charts. I'm going to start with Bitcoin on the weekly. So we are still below the midline here, which is technically weaker, but we still are within the confines of this channel that we have been in for about 6 months now. You can see that last year we had a similar thing. Of course, this wasn't any downside. It was just choppy down and sideways, but it was 224 days. And so if we mark the same amount of time, that brings us to the 7th of October. I've also got a very interesting statistic to show you at the end of the video. Keep this number in mind. So from the bear market lows until current day is 679 days. We'll come back to that. So now this is Bitcoin dominance, and I found something quite interesting here. Okay, first of all, you can see here that we are against major macro resistance. This is a monthly chart, and you can see how well respected this resistance has been in the past. Obviously broke through here, but here we are right up against it. And take note of these potential reversal signals from the oscillator and look at how they worked in the past. Obviously, this one did not work, but here we had a bullish divergence and the reversal, and boom. Here we had a bearish reversal, and here we dropped. We had a bullish divergence with a reversal here, which took a while, but it eventually worked. Now, if I drop down to the weekly, here's what's very interesting. Look at all these bearish divergences, and it looks very overheated. As you can see in the past, bullish divergences did end up causing us a little pump, and the bearish divergences also have in the past caused a dump. So they are valid, and there's a lot of them. As you zoom down, there are so many bearish divergences popping up here. So I think that, I don't know, a lot of people are saying they still expect for Bitcoin dominance to come up to 70 or at least into the 60s. Time will tell, but for now, we are up against major resistance and we've got heavy bearish divergence. So in my mind, this is spelling more like a reversal, which would be great for crypto. Now, moving on to USDT, we have another similar situation here where we are up against key resistance. This used to be the bear market levels and accumulation. And so now we've come down, we tapped the danger zone, the channel of Hades, and that marked the exact top in March 11. And here we bounced out of it. Look at this huge, strong rejection. That was the Japan carry trade Black Monday, and that was your buy the dip opportunity. And here we are now bouncing up again, but you can see the wick. This means rejection. There's selling pressure here. which is good for our bags. ETH BTC is showing an interesting pattern here. This goes back to December 2015, and it does seem to bounce off this trend line, and now here we are bouncing off it again. So let's see whether we can make a recovery, start to make a recovery here, and at some point this needs to break out, because yeah, ETH has been looking very, very weak this whole time. Here you can see the others dominance, which always bounces out of that channel, the channel of Valhalla, and we are popping back out of it now. So this is looking like a potential altcoin rally, in my opinion. Now we got total 3, and this is a bull flag. And if you take the flagpole from the potential breakout move, this is a measured move of over 80%, which would line up. If this broke out, then did a support resistance retest. If it broke through here, boom, and then came back down, that would make sense. Here we have the futures sentiment index, which has this moving average, a 30-day moving average. And this thing has had a 100% success rate, where if you were buying when this thing was dropping, then you were buying the lows. That was the best buy the dip opportunities. And here we are again. So I would rather be buying than selling at these levels personally. Now, remember how I was saying back here that 679 days, right? Have a look over here. Every cycle starting here, after the bear market, from the bear market lows until the banana zone is 670 days. And so here we are. This is obviously 9 days old, but here we are. We're right around here. I am getting pretty excited. Here we have the average monthly returns. And during bull runs, we always have a very green quarter, Q4. So especially in accumulation years. This is not the final bull run year. This is the accumulation year, which is where we are now. And this I find amazing. Check this out. I only recently discovered this, but it is awesome. We've got here the global liquidity index in the yellow, and the blue is a dynamic moving average. And this is on the weekly chart. When you see the yellow line, the global liquidity under the dynamic moving average, that's when the markets are weak. And then look at what happens when it breaks out. That's usually when we have a strong uptrend. And then when it breaks below, boom, downtrend again. Breaks above, we get a nice uptrend all the way. Look at how perfectly it timed last cycle's peak. And here we are in 2024, and we've had a little breakout and a retest of that moving average. So I'm putting my moon boots on. This is a nice overview of a bunch of charts. We have the SPX on top. We have Bitcoin here. We have the crypto fear and greed index. We have the Bollinger Bands contraction. We have the stochastic RSI. These are all in different time frames. You can see here, this is 3-day, this is 1 week, this is 2 week, this is 2-day, this is the RSI. You got global liquidity again showing the breakouts, and you've got gold. All of this just really points to us having a very strong Q4. This is not the time you want to be looking away. So here's a Moonboy target for you, which is the flagpole of the recent rally last year, all the way up to the local top, which would bring us to 158. Now, I personally am not so focused on the price targets. For me, what's more important, whether it's a 150 top or a 85K top, what's more important for me is going to be keeping a close eye on all of these other metrics. I have about 20 data points that I'll be watching very closely. If Bitcoin is at 80K or 95K, whatever it is, and altcoins have done this, and they're topping out, and then you see USDT back here in the channel of Hades, then I don't care what price Bitcoin is at. That's just time to sell at least half your bags, if not everything. So in my personal opinion, it really doesn't matter where Bitcoin is. Of course, The higher above all-time highs, the better for retail to get super excited and start piling in. But yeah, honestly, for me, I'm more concerned about this is what I'll be watching like a hawk. So that's all from me today. I hope that you enjoyed this update. If you could do me a favor, and if you enjoyed this, please hit the like and subscribe to help YouTube algorithm share this and let people know that they're enjoying it. Bye.